Simple can be harder than complex. You have to work hard to get your thinking clean to make it simple, but it's worth it in the end because once you get there, you can move mountains. Steve Jobs. My friends, what we have done here at Charting Wealth is hone things down to make them clean. We have beautiful, simple, clean charts that work time and time and time again. With the price percent oscillator, the derivative oscillator, the Bollinger Bands, Heiken Ashi candlesticks. Just what you need to figure out how to follow these charts. That is what we are all about. We have a great training for you today. In fact, it is entitled, Have a Plan Before Pulling the Trigger. And have you listened? Have you listened to Chapter 8 of the book? We just put it out. Very, very happy with that. It is all about candlesticks. You want to know what candlesticks are about? Of course, we have a great Heiken Ashi candlestick training. A few 100,000 people have taken that since we put it out. This is the chapter that goes into even more depth than the Heiken Ashi candlestick training. Chapter 8. We've got it available for you to listen to, so please do that. If you're not subscribed at chartingwealth.com, then you don't get the daily trainings, nor do you get the PDFs that are in the emails every day, the PDFs for the daily market worksheet, weekly market worksheet, and trade worksheet. Plus, we have trainings that show you how to fill those out. You want to supercharge your training each and every day. Fill out the daily worksheet as you listen. At the close of the day on Friday, we record the weekly review and forecast where we talk about what's happened over the prior week and where the charts are showing us things are going for your practice trading. Also, Patreon members, we sent you the 20 that includes up moves and down moves, weekly vertical crossovers on the S&P 500 potential candidates for you to backtrack and practice trades. You want stuff to do. You want charts to follow, practice trades to be involved in every week. You've come to the right place. We're not a stock calling service. We're an education firm. We're not giving you financial advice. You don't pay us for any of that. We are not doing that, but we are giving you things to practice trade and practice. Get good. That's the way you get to Carnegie Hall. Practice. I love that joke. Maybe I overuse it. Thanks for putting up with me. Let's jump into these charts. Everything up for the day but Bitcoin. Bitcoin, a hammering down, my friends. Down 10.48%. Boom. Does that surprise us? No. Why? Because we had a weekly vertical crossover going down on Bitcoin back on the week ending the 26th of March. Now, it went up some over the next 3 weeks, but that price percent oscillator never changed. Just kept moving down. Derivative oscillator heading down. Also, 2-day chart. We can see where it's gone off the deep end. Now again, this candle has finished, this is the first day of the candle. It will finish on Friday. And a big down candle, getting close to the Bollinger Band as it spreads out with all of that volatility down. Derivative oscillators been negative, gaining downward momentum. Price percent oscillator, which had been flat, spiking over, going down. Half-day chart, we can see where just huge down pressure on Bitcoin on Thursday. So, again, all things being equal, what? How do you finish that sentence? All things being equal, the market tends to move in the direction of the largest chart. And for us, that's the weekly. That's why the weekly vertical crossovers are so powerful. If you don't know what I'm talking about, you need the book. Link in the show notes. Great way to support our work here. Let's move on to the S&P 500. Up for the day, 1.20%. But what do we see going on there? Let me move that 2-day crossover going down. We have a red spinning top. You can see it, a wick on top, but a longer wick, maybe twice as long on the bottom. Getting close to crossing over, going down. In fact, if you look on the left-hand side of the screen, below that first horizontal band, gray one below the 200 period moving average designator, it's purple. You see a blue PPO. And an exponential moving average 8 period, you see those numbers to the right are the same, 4.34, 4.34. means it's laminated. We'll see what happens on Friday. Are we going to have a weekly vertical crossover going down, or is it going to stabilize and not cross? If it does, of course, that will be setting you up for a potential weekly vertical crossover going down. That's a sea change in sentiment in the marketplace of fear versus greed. Greed is when we go up. Fear is when we go down. And when things start going up, people think they're going to go up forever. They want them to. And when they start going down and you have things change over, people think they're going to go down forever. But nothing goes down forever. Nothing goes up forever. What goes up must come down. So, well, businesses can actually go out of business. But again, that's an absolute worst case scenario. That, of course, can occur. But for the most part, for the stocks and ETFs, we look at particularly the indexes. They go up, they go down. Now, we see the derivative oscillator losing momentum, price percent oscillator laminated right now today. Let's move out of the way. We can see, in fact, I got to move it back. Once I messed with it on the weekly, it screwed it up. So I put it in the right place. We can see where we have not hit a lower low yet. The low, the most recent low we saw occurred back on Wednesday. This is just the first day of the latest 2-day candle. It is going down. We do need to redraw that 2-day trend line so that the minute we look at the charts, we can see what's happening. Derivative oscillator gaining downward momentum. Half day, we can see again where things had spiked down, but again during the day on Monday, what happened? Now again, remember, Heikin-Ashi candlesticks are drawn differently. In fact, if you take chapter 8, the training we just put out, you will understand why we might have a red candle for the first day with down movement being shown there. And again, it's showing us that not that there was down movement, and I'm saying that wrong. It's showing us the average pace of the movement on the chart. It's showing us some inherent weakness still in there. We look at the half day. That's where we see what happened intraday. It's different. It's different calculations, shows us something different on a smaller chart. And you have to understand waves are at different places depending on their size. The half-day chart's a ripple. The 2-day chart is that intermediate chart, maybe sort of a wave there. The weekly are the big swells that are pushing toward the shore, that are driving billions of gallons of water. So if you're a surfer like I am, you can use that analogy. Keep that in your mind. That's why we see on the half day some indecision in the morning, up movement in the afternoon, touching that 2-day trend line, but not penetrating it. Derivative oscillator losing some momentum at the end of the day. Price percent oscillator losing some of that downward push also. That's where we are on the S&P. We'll be watching, waiting, and seeing what happens on Friday. Let's go to the Qs. We see the Qs up for the day 0.77%. But again, for the week, strong down candle. Price percent oscillator pulling away from the red signal line. Derivative oscillator still positive. We like to see the derivative oscillator go negative when the price percent oscillator crosses over going down. That didn't happen. It just makes us feel better about the continuation of that move. What do we see on the 2-day chart? A solid green candle, first day of the latest 2-day candle. That's a slowdown in the down movement. Price percent oscillator nonetheless still going down. Derivative oscillator gaining downward momentum. Half day, you can see where things reach their low in the afternoon on Wednesday and then sort of spinning sideways and again showing a little loss of some up movement in the morning in the afternoon. Derivative oscillator still negative. Price percent oscillator flattening a little bit, still heading down some. So that's where we are on the Qs. We will pay close attention as to what happens on Friday. So again, we had that weekly vertical crossover this last week. We are already in that trade, or you've already hit your profit points, sold that position, and you've taken your virtual profits. Again, you set those up according to the rules we set with our profit and loss bands. We'll re-put that training out again for the folks who haven't had it. Also, read the book. Let's look at 20-year bonds, TLT. What do you see going on there? Well, we had a crossover back on the week ending Friday the 30th. The next week, rather lackluster. This week, of course, it's pushed through the weekly trend line. Price percent oscillator still positive, heading down. Derivative oscillator still green, losing some momentum. 2-day chart trying to cross over, going down. Hasn't happened yet, of course. Why? Because the candle hadn't finished drawing. That may happen on Friday. We may see a bounce off. Who knows? Keep your eye on that. Again, important to pay attention to. Derivative oscillators already gone way negative. And we see on the half-day chart, we can see 1, 2, 3.5 days of strong down movement and then just sort of puttering to a stop so far. Up in the morning, a little down in the afternoon. We'll see if that resumes or if that's as far as it'll go. Things will start to recover in bonds. Just don't know yet. That's where we are on bonds. Lastly, since we've already done Bitcoin, we'll go to gold. Gold up 0.41%. Big green up candle still forming for the week. Derivative oscillator heading up. Price percent oscillator gaining upward momentum. Price well above the weekly and the 2-day. Let's look at that's the 2-day and the weekly trend lines. Let's look at the 2-day chart. We can see where things peaked in gold on Monday. That was the Friday, Monday. Tuesday, Wednesday, things started slowing down. And again, that slow down continues. It was up for the day. That's why we have a green open box candle, most likely. Price percent oscillator still heading up. Derivative oscillator losing a little bit of momentum. Why? Because of the devolution in price. It's not continuing to hit higher highs, but actually lower highs, if you look. So we'll see where gold continues to move. But again, the 2-day looks okay. The weekly looks good. Half day, of course, it crossed over going down. Back, wonder why we drew that so early. I guess it must have crossed over yesterday afternoon. Must have. And continued on in the morning and in the afternoon today. Up a little bit, recovering, pushing through that 2-day trend line, but not enough to switch it back over. So again, we'll continue to watch gold. Price still well above the weekly and the 2-day trend lines. That is where we are, folks, as we end the day. Do pay close attention tomorrow on that weekly chart as to what happens with SPY. Is it a weekly vertical crossover going down? Are we going to see this market start to roll over? The last time that we saw that happen, it only went for 2 weeks, and then inevitably it went up again. Does that mean that will always occur? No, it does not. At some point, this market will peak and roll over, and you want to be there for it. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.